You must listen to this before you purchase that insurance policy, that life cover. I mean the education policies, the money back policies, and that kind of policies. If you cannot ascertain, if you are not sure of consistency of your incomes for the next 5 years, for the next 7 years, you are risking in that investment. There are specific things that you will never be told by that fella selling you that insurance before you invest. That is the reason in your circle of 5 friends, you can't miss one who has a bad taste in his or her mouth about insurance. It's what they suffered, the loss that they incurred because of what I'm about to tell you about that policy. Just like we experience when we are signing these funny documents, loans, whatever, in banks, there is so much that is written in unclear characters, very tiny characters, letters that you can't see. But because we are under certain pressure, we don't read but append our signatures. And under the law of evidence, it is expected and required that you must have read and understood everything before signing that document. But you must remember, the agent, this person who is selling this policy to you, is under pressure to make an income for him or herself, and that is the commission. So in most cases, it's not about you, but about their commission, their income, not even the company. The company might have something for you at heart, but there is a person who is more important in between, the broker, the agent. The agent will never tell you this. Number one, that policy will have zero money for you up to the end of the 3rd year. It will have zero cash. What do I mean by that? If for whatever reason you'll be unable to pay or service your premiums for the first 3 years, unless you die, unless it's out of whatever is covered under that policy, where in most of them, they are riders, which you also have to pay for. But because there are specific policies that will cover your death, that one is okay, disability is okay. But if you lose your job, if your source of income is cut short before the 3rd year, you have paid the first year, you have been paying 10,000 each year, you have paid your 120,000 first year, another 120,000 second year, another 120,000 third year, that is a total of 360,000. If anything happened before at that time and you are unable to service the 10,000 for the first month of the 4th year, it's a shock. You lose 100% of that 360,000. So before you sign that document and pay your first installment, that one must be in your mind. You are supposed to consistently service that policy for whatever reason. If for any reason you are unable to service, if it happens in the first 3 years, zero money. They will refund you nothing. But you will never be told that one. Number 2, you will be enticed with a policy loan. That as you continue to pay, you can even access a loan from that policy. And that is another catch. Because you will not be told that that loan that you are being told about the policy, which is a main destroyer of that investment or whatever saving you are doing, is that in the same period, first year to third year, because there is zero cash value, absolutely there is zero money, you also cannot access anything in the name of a loan. Any cash value that you have in your policy begins from fourth year, and it guarantees yearly onwards to the last year of the policy. So in the fourth year, you only have 10%. So you have paid your 480, but you only have 48,000 at the end of the fourth year. So one reason that you'll be given, if you are unable to pay, when anything happen, come for a surrender value, come for paid up in policy investment. It is this 48,000 that we are talking about. Will it be spread? Or you had taken a policy of 15 years. Which shall be spread? It's important to note that whatever is called a policy loan will only be a maximum of a percentage of what you have, the cash value that is in that policy. So in the end of fourth year, you have only 48,000 because you are doing 10,000 each month. So by end of fourth year, you have done 480,000 and you have a cash value of 10%, you have 48,000. The loan applicable at that time will only be 70%, 60%, or whatever percentage, which can never be beyond 70% of that 48,000. So you must have a lot of information and questions to ask before you put your signature and pay your installments. The other thing they will not tell you, few will tell you about the process that you are supposed to go through in order to claim your tax reliefs. Because the government, through the tax bill, the finance bill, offers incentives to build up the life businesses insurance. And one such is that you are given a relief of 15% of the premiums that you pay towards these life policies. One, they will tell you that most will not aid you to know the process that you will have to go through in order to claim that relief. Number 5, as we continue, I request you to subscribe to my channel, share this vital financial literacy information to another person, engage me and other viewers in the comment section. Tell me something. Tell me whether you are learning anything. Tell me a point. I also want to learn from you. Then once we interact through liking the video, sharing the video, commenting, then that information, all those parameters are used by YouTube algorithm to share this important information with other people, which is very important to shape and improve a knowledgeable community around us. So that is a vital information. Before you sign that next policy, think about those ones. I'm coming up with that next video.